Debtbusters says they are seeing a significant growth in demand for debt management services, which points to increasing numbers of South African consumers subjected to raised interest rates and high inflation, facing up to their debt and taking action to repay it. For more on Debtbusters' latest debt index for the fourth quarter of 2022, we are joined by the head of the organization, Benay Sager. Benay, it seems that we are talking every week here on Newzroom Afrika on trends from, as we see in South Africa, when it comes to the high cost of living and consumers who are under a lot of stress. Let's talk about the debt index and how it's changed since the pandemic in 2020 to date.
Yeah, thank you for having me on the show as always. And you are correct, Zolani, that we do speak regularly. And I think what's important is something that we have certainly seen in this quarter with the South African consumers, and that's essentially the resilience of the consumers and the determination to really deal with the financial situation. I think in our business of debt counseling, we see lots of consumers in difficult financial situations, but at the same time, I must stress the point that these are consumers who are trying to do the honorable, the right thing, and repay back their debt. So they're not escaping and they're not running away from their debt. And we've seen increasing engagement from consumers. Just to give some numbers for our viewers, we've seen an increase of 53% in terms of inquiries compared to the same period last year. But we've also seen 130% increase in terms of online debt management. And what that means for us is consumers to be able to use the Debtbusters website to really educate themselves with no cost, no obligation, to really be able to learn about their debt profiles and so on. Specifically to your question, during about 2 years ago, in the middle of the pandemic in 2020, interest rates were probably at all-time low, and we saw that from consumers coming in. For example, 2 years ago, towards the end of 2020, bonds, when consumers came to us, were about 8.3 interest rate, 8.3%. Now they're at 10.8%. And what we've seen over that period is many consumers, particularly younger consumers, who were taking out a bond or maybe financing a vehicle for the first time because of the low interest rates, are now having to feel the pinch of it. You mentioned inflation. I think inflation, as well as interest rate increases, as well as, I would argue, the fact that salaries haven't really increased in the last several years. Now the full effect of those three things are very visible on the South African consumer, and we're definitely seeing that consumers are having to supplement their incomes with basically personal loans, to the extent that we, in the incoming class of quarter 4 2022, 96% of the applicants for debt counseling came to us with a personal loan. We haven't seen that kind of numbers before, and I think it's just an indication that consumers are supplementing their incomes by any means necessary.
How are debt-to-income ratios looking? They were at an unsustainably high 161%, particularly among those with a take-home pay of 20,000 rands per month or more.
Yeah, I think we see the elevated rates, as you mentioned, 161%. I need to qualify this. What this means is your total debt compared to your annual income is 161%. So, for example, if you're taking home 100,000 rand in a year, that means your debt is 161,000 rand. And essentially, that's quite a large amount. In some countries, it's even higher. But in our case, most of the debt is essentially because of short-term high interest rate debt. And as a result, it's eating up somewhere between 63 and 68% of a person's net pay, meaning take-home pay. So it is unsustainable, and I think this is why consumers are doing the right thing and repaying back their debt through the means of debt counseling.
And what have you seen when it comes to the impact that those payment holidays have had on how the consumers are managing with their debt now that the payment holidays are over?
The payment holidays were a big help to the consumers in April to June, or actually April to September 2020. And at the time when we spoke on this show, actually, we said that consumers have to be very careful about understanding the impact of it. And during that same period also, because interest rates were very low, a lot of consumers took out home loans and financed their vehicles for the first time. And as a result, they ended up taking on some debt that as these payment holidays have gone on and interest rates have increased, they are right now unable to service this debt. But I think that was always going to be the case. And I think we've definitely seen the full impact of this 2 years later.
Let's look ahead at what to expect in 2023 in terms of how all of these factors are likely to affect consumer debt this year.
Yeah, I think we expect interest rates on average, in terms of what consumers are feeling for their debt repayments to go up even a little bit more, because right now, talking to you about Q4 2022 numbers. And as you know, there was another interest rate increase last week, and that's going to reflect in Q1 2023. We expect inflation to persist also. And the other thing we have this year is the impact of load shedding. We're particularly concerned about the impact of load shedding for consumers who are working for companies that are very small and may not necessarily have the means to essentially put in place to mitigate the effects of load shedding. And unfortunately, this may result in salary reductions or cuts in some cases. So I think for the rest of the year, we expect consumers to be under severe financial pressure, unfortunately.
Benay Sager, the head there at Debtbusters, thank you very much for your time.